True that, Chamberlain. Holiday or not, business goes on. Even for the holiday, I mean, we spend money during the holiday. So you see, life is all about business. And so we are starting as usual from the global space where oil is still trading today. The prices rose on Tuesday after hopes diminished that negotiations between Israel and Hamas would lead to a ceasefire in Gaza amid concerns that the lingering conflict could potentially disrupt supply from the key Middle East producing region. We look at the numbers now. We see a gain, a nice gain there, 0.10% for Brent. And yes, we have gone back to the $90 index point, $90 points, $90.52 a barrel. That's what we have for Brent, while for WTI is also struggling and pushing, is now at $86.53 after it gained 0.06%. Now look at the factors driving this. A fresh round of Israel-Hamas ceasefire discussion is going on in Cairo, ended in Cairo, a multi-session rally on Monday, leading Brent to its first decline in 5 sessions. And even with the decline, we see that it's still looking really good. It's important to note that Nigeria's benchmark is just around $77 a barrel. So imagine the gain we could make if we could optimize our production at this time. Now, Israeli Prime Minister Benjamin Netanyahu has said that an unspecified date had been set for Israel's invasion of the Rafah enclave. So if we're about to celebrate that, we saw that some of their troops left some parts of Gaza. Well, this is not a very good one, and that's ending the hopes that briefly gripped the market yesterday that geopolitical tensions in the region might be easing. So it's still building up right there, and we know that that's a major contributor to the price of oil. Without an end to the conflict, there's an elevated risk that it could involve other countries in the region, especially Iran, and Iran is a major Hamas backer and third largest producer in OPEC. So there you go. The price of oil is still being threatened. Might go up more, even though analysts have said it's going to remain under $100 a barrel. Then we come to Nigeria now, where we look at our currency. It's still doing good, gaining. We see for yesterday on the NAFEX, on NAFEM, it was 1.63% up. That's what it gained. So it opened at 1,251 naira 5 kobo, but closed at 1,230 naira 61 kobo, gained right there. While for NAFEX, it closed at 1,239 naira 88 kobo after it opened at 1,255 naira 47 kobo, 1.24% gain on the naira. And we know that yesterday the CBN was really busy, and there's more hope that this is going to add more value to the naira. For instance, the central bank asked all banks to stop the use of foreign currency denominated collaterals for naira loans. And yet Ede will be speaking more on this during Business Incorporated at 1 p.m. So you want to join to understand more about this instruction from the regulator. The CBN Acting Director of Banking Supervision, Mr. Adeton Adedeji, made this known in a statement yesterday. The regulator directed all banks to trim all existing loans with foreign currency collaterals to 90 days or attract a 150% capital adequacy ratio computation as part of the bank's risks. And according to the CBN, the bank is on a mission to ensure that there's adequate supply of FX, even as the naira is being strengthened. But on the other hand, we do know that the naira is strengthening because of the intervention from the central bank, and our FX reserve is depleting. That is a worrying one. Well, some economists have told me not to worry about that, because that's, what is it meant for? It's supposed to come in handy at a time like this. But they're also quick to say that even though, yes, it's not wrong for the central bank to support the naira, intervene in the FX market, it's not a sustainable system. So we still have to look at our production system to keep a sustained value of the naira. Also yesterday, talking about intervention by the central bank, we do know that the CBN announced the sale of foreign exchange to Bureau de Change, that's the BDC operators, at an amount of 1,181 naira, 1,101 naira for $1, and they did about 10,000 dollars yesterday. According to the circular, each BDC is instructed to sell the dollar to eligible customers at a rate not exceeding 1.5% of the purchase, above the purchase. This suggests BDCs are not expected to sell above 1,117 naira for a dollar. Well, away from the CBN, but still on Forex matter, the federal government is expected to receive $1.05 billion from Afrexim Bank by the end of May, and this is to help revive the economy and improve the foreign exchange market. The $1.05 billion loan is part of the $3.3 billion pre-export finance facility arrangement between the NNPCL and Afrexim brokered last year. In the deal, Nigeria pledged a total of 164.25 million barrels of crude at 90,000 barrels every day, with loan repayments starting from this year, 2024. In January, the NNPCL had received the initial disbursement of $2.25 billion of the agreed $3 billion under the crude oil repayment facility. All right, and one other way of, boosting the naira is, of course, increasing trade. Trans-border traders. Remember last week we did hear that the federal government has removed the restriction between Nigeria and Niger at the borders for trade. Now, a sad one that came out, I think, yesterday is that traders at the borders are beginning to shun Nigeria's currency, the naira, because of the loss of value. They insist that converting naira to CFAs, which is what they use at Cotonou area, the French-speaking part, results in a loss of earnings to them. This is another discouraging factor, within African trade, intra-Africa. But let's discuss this this morning with the lead consultant and Chief Executive Officer of 3T Impex Trade Academy, Dr. Bamidele Ayemibo. Dr. Ayemibo, thank you so much. And thank you for choosing to spend a part of your holiday with us. We appreciate that.
Thank you very much for having me.
Yeah. So, the cross-border, we have, of course, restrictions. Remember the last administration led by President Buhari? Yeah, he was very strict and put a lot of that. And now we see a little bit of ease in the administration of President Tinubu right now. So we see the border between Niger and Nigeria. Tell us from your perspective, this easing of border trade, is it to our advantage or not? I know we have programs like AFTA, which is supposed to ease, and all of that, ECOWAS, treaties and agreement. But is it to our advantage or not at this stage?
Yes, it's to our advantage. Nigeria is a very big country, and in as much as our export volume is not very high right now, we are still doing a lot better than Niger. Import of Nigeria, of product from Niger to Nigeria is just about $100 million. Nigeria is about 300 million, so we are doing times 3. So we are at an advantage, ensuring the border is open for us to be able to trade with Niger. So, in my opinion, it's a better decision because we are losing, and the number of businesses are affected because of that.
So what about this notion that because it's kind of difficult to clear at our ports and all of that, you see a lot of things are being cleared at those ports and then being moved, maybe sometimes smuggled into Nigeria?
So now I'm looking at it from export perspective. Now, you're very correct in the sense that people sometimes smuggle goods into Nigerian border, even when the border is closed. It doesn't stop it. So the issue is we can't stop that by closing the border. Rather, we are fixing Nigerian ports to make it more competitive for people to be able to come in, rather than saying we want to close. Closing the border, you close it, you open it. People that want to do illicit business, we still have to do, they are still going to do illicit business. So you see people crossing the border and moving good across the border, even though it's been closed. So, but it's good it's open now. I'm looking at it from the export perspective, not from what we are bringing in, but what we can take out to be able to create a lot of jobs locally. And you're talking about AFCFTA. So that's the more reason. So if we are signing AFCFTA, we have ratified AFCFTA, we can't be closing border. We should be thinking of how we can join the guided trade initiative and be able to trade in Africa rather than closing our border.
But is it not a threat to some domestic industries?
Now, I tried to check a number of products that Nigeria will trade in AFCFTA. It's not a threat. You know, there's this concern about being threat. When Nigeria did not sign the AfCFTA, a number of African countries were shocked that they were thinking Nigeria is going to dominate and we're going to come in. That why are we pulling back? Because they know us as being very aggressive, wanting to do business. So why are you afraid? So when we signed, it was a welcome development that we signed. So when you check most of the product that Africa currently imports from even around the world, that Nigeria is capable of exporting, we should be focused on how we can export those products rather than thinking that they are going to enter our border. Because when you check the competitive index in Africa, Nigeria is still doing a lot better than many African countries. So rather than protecting ourselves and say we don't want people to come into our market, why they are coming in, why can't we go out also? But the truth is, not much is coming into Nigeria from Africa. A majority of Nigerian exports, either import or trade generally, is far, far beyond Africa than Africa. After all,
intra-African trade. But they come in, I mean, they come from outside Africa, but they're coming through our neighboring countries.
Those are illicit. I'm talking about legal trade. Those are illicit trade. Things that Nigeria naturally would not allow, that people are smuggling in. Opening the border will not stop that. If it's illicit in Nigeria, it's illegal. If the duty is high, the duty is high. If the government abandoned it. So anybody doing is illegal trade. But I'm talking about people that are doing legal trade now, that opening our border is a lot better for us. And what we should be doing is search how we can grow the non-oil export to be able to take advantage of AfCFTA rather than closing our border. So I think it's a welcome development that the president have done.
All right. So now that we hear stories of some traders at the border shunning Nigerians' currency because of the drop, well, we appreciate the gain we've been having for more than 2 weeks now, but it doesn't seem to settle down with them, because at this point they say having to trade in naira is a loss to them.
You know, so this is why we must now take non-oil export a lot seriously, to be able to show up the value of naira. What the government is doing right now is okay, but it's in the temporary. I mean, we can't continue to do this for a very long time. I mean, the MPR has gone up, investment is coming in. By this you mean
intervention of the CBN? Let me just...
No, I'm talking about, okay, so MPR has gone up. So Nigeria is looking at a place we want to invest because of Treasury bill and a number of other government instruments. So now investment is coming in, so FX is flowing in, rate is coming down. But it's not sustainable. We now must generate Forex ourselves, because those money that are coming are going to go out at some point. So what is happening at the border is to let us know that, look, even our neighbor are enjoying our currency because our value is going down. So we must grow non-oil export. I think that's what we should be having conversation around now. To a large extent, CBN is doing a lot. There seems to be a synergy between the fiscal policy and the monetary policy to stabilize the economy. But now, can we begin to now take non-oil export growth very much seriously? Because I'm not seeing a lot of that in the effort being made by the government, both on the fiscal side and monetary side.
I mean, because when you say that you're seeing the collaboration more obvious, I'd like for you to point that out, some points where you have seen that. And yes, we see, especially since the Governor Cardoso took over, we've seen a lot of efforts. I mean, we cannot count the statements and the circulars we have seen. But what about the fiscal side? Are we really seeing movement?
No, we are not seeing enough movement there yet. And that's where I say, because what CBN is trying to do is, in almost all the intervention that the last administration went into, CBN said, look, that's not our job. And the reason why CBN went into before, because the fiscal side were not doing enough. But I think it would have been good for CBN to work with them at that time to be able to get them to do what they need to do. So, for example, you feel there's a need for intervention in a particular sector, why don't you support the ministry in question to be able to achieve that? That's exactly what I think we should be looking at. But now we're not seeing that in terms of, like you said, non-oil exports. So, for example, I'm expecting by now we should be hearing the president talk a lot about non-oil export, the Minister of Trade, Minister of Finance, saying a lot about non-oil export trade. We're not hearing this, statement that shows that this is what the government wants to do. Let me give an example. So we have ambassadors around the world. Our ambassadors should have a target, like ambassadors in Nigeria have. We've had a situation where we do some program with National Banking and Finance, American Experience Studies, and on trade. And we see embassies sending their staff, Nigerians, to come and train to be able to develop Nigerian market for those countries abroad. So we're not seeing that in Nigeria. I think Nigerian ambassadors should have KPI. you must double Nigerian export to your country, else you lose your job. Something that will make them to sit up, so that at the end of the day they know, if I'm in this country, in the next 1 year, this is the volume of trade of Nigeria in this country, we must do export to this country, so they can see themselves as marketing Nigeria in those countries. We're not seeing that right now. I think that's a challenge. So that's why I'm saying that maybe, the idea of body language, if you see body language of President Bola Ahmed Tinubu, maybe that will make them to begin to consider that as something we need to do at this time.
I guess another discouraging factor to that would also be the operating environment right here. We've had manufacturers groan with this electricity hike. We're talking of insecurity for the farmers, for most of the raw materials that should come from the farm. So, I mean, if you give them targets, they will ask you, do you have it ready? Do you have the raw materials? Do you have the crops? Do you have the products? Have you processed anything?
Now, okay, I operate within this environment. I'm not disputing what you've said, but the fact is that Nigeria is exporting. NEPC confirmed Nigerian number of products exported increased from about 240 to about 273 or thereabout last year. Nigeria is exporting. What we need to do is to check, what are we exporting? Which of them is not affected by this issue you've mentioned that we can increase, because indeed we can increase it. So I'm not disputing what you said. So
what are those products that we can focus on that, at least for now, the low-hanging fruit?
Let me give you an example. We talk a lot about cocoa, right? Cocoa demand in the world is about $10 billion.
And we just had a surge of cocoa
price now. But that's not where I'm going. Soya beans demand is about $70 billion. Soya beans. Corn demand is over $30 billion. Now, these are commodities that have not even added value. If we now decide to begin to add value to it, you see what will happen. Same for cocoa. Cocoa price is going up, but of course, we shouldn't be exporting commodity, because we should begin to add value to it to be able to grow. Because if we don't add value to it, the market size for cocoa is 10 billion. Market size for chocolate is over 30 billion. So he's making money. The Switzerland people, the German people that are adding value to it. So what the government needs to, I know there's a challenge with electricity hike and the like. We are in a situation where we can't help it. We keep appealing to government to do what they need to do. But the fact is that we need to grow non-oil export. Now, if I increase my volume of export, I'm going to drive down the price and cost of production. So we should be looking at those things rather than just say, okay, they have increased the price. Of course, it's not good for the economy. There's complaint about it. But in spite of that, the fact is that Nigeria is exporting. But what we need to do now is to increase the volume so as to be able to ensure we sustain the improvement in the value of the naira.
Talk to the private sector, I guess.
Yes.
But the private sector will ask you if the government has done the ease of doing business, if that has been taken care of. Even exporting, when you talk about those who are exporting currently, activities around the ports.
No, it's improving. No, I'm an exporter. It's not there yet, but it's improving. So
what has improved? Okay,
so last year I was to do a shipment, the clearing of custom. Within 2 days I was done with clearing. I had issue moving the goods from Lilipon Container Terminal to Apapa. It took me 5 days. That's the problem. So those are the issues I think we have to look over now. So the issue is not with the agency again. Now, because of what the government is doing at Lilipon Container Terminal, another terminal where we have joint inspection, is improving. So we must commend the fact that it's improving. Now, even moving now to the port, I did a shipment this month. It's a lot better. Last year, I spent 5 days. Now I'm spending about 2 days. So it's improving. We should be doing more. I shouldn't be clear. I should be able to do everything within 1 or 2 days, everything. But it's taking about a week to conclude it. So in as much as there are issues around the port, but we must also acknowledge the fact that there's an improvement. The improvement does not mean we are there yet, though, but I think we are better off than where we were before.
I think we should end on a good note. It's a holiday. It's a holiday on a good note. At least it's improving.
Yes.
And we hope they will continue to work on it.
Yes.
And to continue to improve.
Yes.
Thank you so much for your time, Dr. Bamidele Ayemibo, Lead Consultant and Chief Executive Officer of 3T Impex Trade Academy.
Thank you very much for having me.
All right, now at least we end on a good news for once. Let's take a break now. When we come back, we'll head to the market. We couldn't take Caleb yesterday. He's standing by, and we do hope this holiday will not be smeared by a network challenge. So we'll talk to Caleb after the break. To stay with us. Welcome back. Here is Business Morning on Sunrise Daily. We head to the markets now. It is closed today. It's going to be a long holiday. till Thursday. Can you beat that? But anyway, let's look at the numbers from yesterday. It was a red market at the NGX. At the close of trade yesterday, we saw those numbers. The all share index dropped further away from that 104,000, closed at 103,046.99, and that's minus 0.38%. And we see the risk of losing the 58 trillion naira for the equities cap. 58.27 trillion naira is what's happened, and we saw a big drop with the figures yesterday. The banking sector was down 2.67%. Consumer goods was also down 0.27%. Insurance and oil and gas were unchanged. We see it seems oil and gas wants to try to co-opt insurance into the unchanged. Industrial goods was unmoved, even though it was a bit positive. Top trades were Abbey Buildings, GTCO, and Accessco as expected. We see the figures down. You know that a lot of profit taking took place on the banking counter yesterday. And now let's speak to Caleb Alimi. Caleb Alimi is the chief dealer at Providus Bank. Caleb, good morning. Good to have you today. We couldn't do it yesterday.
Good morning, Nini. I hope we have better luck.
Yes. I've been praying about this. So yesterday we wanted to talk about the auctions of last week and reactions to it. And of course, already the second quarter calendar has been activated. How's it going so far? And then we have a lot of holidays this week. Investors will just have to be patient.
Exactly. First of all, we are grateful for the holidays.
Because you're not at work, Caleb. You don't want to work.
No, we want to work, but we also have to rest and recharge, you know. So that's about that. Last week, let's take the conversation from the interbank liquidity. Interbank liquidity was really positive. Week on week, it remained positive. And that's why we saw the CBN come into the market last week with another auction. They floated 500 billion across, 3 standard maturities, 91 days, 182 days, and 364 days. However, they sold roughly 650 billion or thereabouts, to mop up the liquidity in the system. We did see the impact, the full impact of that as at yesterday, the business week of yesterday, where, liquidity had dropped, from positive 100 billion to about negative 43 billion. We also saw interbank rates, rise from around 21.75 where they closed last week to about 27-28%, yesterday. That's on the back of, like I said, tightening liquidity. This week we're supposed to have an entity auction. The entity auction is one that everybody can participate in, where the DMO is offering roughly 149 billion, about 150 billion across 3 maturities. We expect that interest rates will remain elevated across those 3 maturities. The last auction for this one, for the NCD, closed around 16.24, 17%, and 21.124. We think they're going to remain around those levels again at this auction. The auction was supposed to hold on Thursday and settlement Thursday, but due to the holiday, that has now been extended to hold on Friday and settlement to be there stage Friday.
So we see the holidays disrupting, activities in the market as expected, but does it have any impact, or it's just, moving some of those auctions a day forward?
The impact is strictly operational. It's just changing the date of the auction. It doesn't impact on the interest rate or the appetite for the customers or for investors. It's strictly operational.
So let's talk about the yields now, the rates. We've seen it increasing, even though that, of course, increases the costs of a fund for the government. Of course, it's good for investors because, there's a promise of you earning more. Do you see a further increase? A lot of people are betting if it can get closer to the inflation rate.
Well, that's unlikely because if you look at the purpose for which CBN has taken this route, is largely to bring down the exchange rate or to lead to an appreciation of the naira. And we can see that over the last 2 months, the naira continued to strengthen. Just yesterday, the CBN also sold to the BDCs, authorized BDCs, at 1,101, and give them a 1.5% plus margin. What that has done is we've seen even the autonomous markets and all sorts of other markets, take pricing from that, and rates have continued to come down aggressively. So the CBN, we don't see the rate inching any further because, what they're doing or what they've done so far is we can see the impact So I expect that they will just keep the rates where they are currently at around 21%, which is a real return of about 27, 28%, which investors are pretty satisfied with. And we'll continue to see influx of foreign investors, foreign portfolio investors come to enjoy that high yield. So I think there's no need for them to take the rates higher. It's sort of a...
Yeah, and talking about the CBN intervention, we see it have a negative impact, as expected, on our reserves. Should we be worried?
We may be worried, but we then also need to look at the other things that will contribute to that reserve. First of all, is the sustained increase in the price of crude oil. The other part will be our improved productivity as well in terms of crude oil. So long as those factors are still there, we should be relaxed. Also, there's going to be the local dollar, the dollar-denominated bonds that will be issued locally. That would also attract more money to the reserve. And they've also said that they will come to the Eurobonds market proper in the second half of the year. So those are other avenues that are going to show up the reserve. What we see in the reserve today is a temporary shrink. The measures in place, the plans in place to restore that reserve. So it's nothing to be worried about.
All right, Caleb, we'll take your word for now. At least we see oil prices, Brent is now above $90, so that's good for us. But thank you so much for your time, and do enjoy the holiday.
Thank you for having me, Amy. Take care.
You too. All right, so that's it on Business Morning on Sunrise Daily. Let's head back to the Sunrise Daily studios with Chamberlain, Malkwe, and Ayo is not around today. So it's Chamberlain and Malkwe, back to you.